Welcome back to Trading with CJ. Really excited about this one because we're talking about one of my favorite topics, and that is traveling, the travel stocks. I did a video on growth stocks not too long ago, but now we're talking about the travel sector. We have a tier list, and this is going to be me ranking these particular stocks in my order of a preference of what I personally want to invest into / already own, and ones that I'm not so interested in. This is just my personal opinion. I'm not a financial advisor. Please always do your own research before investing into the stock market. If you want to join me on a Patreon where I give you my stock picks and exclusive videos and Discord access, lots more things going on, come and join us on the Patreon. Link to that is in the description below. So let's get into this one. We're talking about travel stocks. If you appreciate all this, please go ahead and smash the like and subscribe to my channel as well. It really is appreciated. We're on the road to 10k. I really want to try and get there. Thank you for all the support as well. We're going to get into this travel stocks. So we're covering here a mixture. My tier list that I'm going to be putting up here is number one, quality. Quality picks for me, what I would happily buy at these prices. Then we have good, average, meh, not a massive fan of them, and then stay away. Ones that I'm going to be avoiding do not interest me whatsoever. Like I said, this is just my personal opinion. You might see something completely different. Yours might be the opposite way around. This is just what I personally think about these companies. So the first one up is going to be Southwest Airlines. Ticker symbol LUV. Southwest Airlines is one of the big American airlines. As you know, there's a top 5, and Southwest is one of the biggest ones there. This one does more kind of domestic flights throughout the US, and it's actually been holding its own in terms of its stock price throughout this pandemic. It's higher now than where it was crash level. It's actually about 12% higher at this current time of recording than the crash level. I think this company is a good investment. Okay, it is a company I do own. I probably won't be adding to it at its current prices, only because I think there are a lot more better plays that we're going to be covering with more upside in the short term anyway. But it's a good holding, okay? It's not got the worst financials out there, by no means the best. But like I say, this has been doing domestic flights, so even if the international travel ban goes on a bit longer than we hope for or expect anyway, this one is domestic flights. That's why it's performing its own, and it is currently trading at higher prices. So Southwest is a good investment. Up next, we have a UK stock, and this is called Easyjet. You probably know about Easyjet. One of the most popular companies within the UK, low cost, cheaper airline flights. They're actually still down in terms of their stock price from the pre-crash levels over a year ago now. We're still down about 35%. I think it boasts good upside recovery, and that's why for me, this is also a good investment. Not the best financials out there, okay? By no means. Currently it is making a loss of about 35% per year, and debt ratio is not the best out there, but it's also by no means the worst. So Easyjet also falls in as a good stock for me. It is another one I do currently hold. Would I add at these prices? Potentially. I do think it is good below the £10, and like I say, it's still got 35% just to get back to where it was pre-crash level, and we already know the same goes for all of these companies. We are going to be seeing recovery, okay? So really you have to start looking more towards the sector that they are in and the financials that they currently have. So now sticking with the UK airlines, we are going to go to IAG, better known as British Airways. This one was in the news a lot throughout the last year, losing a lot of jobs, etc. They did a massive split on their stock price, which is why we saw this one drop down after a nice recovery. This one has a long way to go. We're still down about 55% from the pre-crash levels, which is why I think it boasts one of the best upside returns, okay? Because it is one of the worst hit ones in terms of the travel stocks that still hasn't massively recovered. It's gone on to recover a lot, but we are still down 50%. But with that being said, they do have a lot of debt. Okay, so this one is not one that massively interests me. I do think it has good upside recovery, so I'm not going to put it on stay away. But what I will do is put it on meh, because it's not one that massively excites me here. But I do like the fact that they do have a big upside potential return here. But the debt is very high. But speaking of companies with very high debt, this one has one of the highest debts in terms of the travel sector. We're talking about American Airlines, ticker symbol AAL. This is obviously one of the biggest companies within America in terms of the airline sector. It's in the top 5 right there for sure. But this one has a 15 billion market cap, but the debt to equity ratio is a lot higher. It's about 111% debt right now, okay? Massive amounts of debt. That's the kind of one I would stay away from. Of course, it has recovery side of it. It probably will do well with flights picking up. But over the long term, they're going to have to pay off this debt. It is making a big loss as well. That's why for me, American Airlines is one that I'm staying away from. I was in these. I took massive profits. But yeah, I wouldn't get back in at current prices, that's for sure. Now let's shift focus a little bit. We're going to touch on some of the cruise lines, okay? There's the three main cruise lines here: RCL, CCL, and Norwegian. We're going to start off with CCL, Carnival Cruise Lines. Carnival Cruise Lines was one of the worst hit companies within the entire stock market, okay? We saw this one drop down crazy amounts. It has since gone on to have a nice recovery, but from pre-crash level, we are still down around about 33% or something like that. But this one did drop down to ridiculous lows of around about 85%. So it has had a big recovery. It's currently still trading less than $30 per share. Now for me, CCL is one of my largest positions. Do I think this is still a good buy? Yes, okay. And it's currently making a big loss. It has a profit margin of less than 182%. So that is massive. The debt is not the worst, but they do have quite a lot of debt that they have taken on. They're going to have to pay all this debt back. However, if we're comparing this to other cruise lines, I think this is one of the much better buys out there, which gives you the better chance of having good returns over the next few years. Having that exposure to the cruise lines is something that I think is definitely vital if you're trying to get some exposure into the travel sector. This one's more risky, but I do think it has nice upside potential, and over the last 5 years it is still considerably lower than where it has been trading throughout any of that time. So CCL for me is a good buy. It's a company I own. Will I add more? Potentially, if it drops a bit more. I don't think it will, maybe a few percent, but nothing to make me want to build my position even more. Potentially though, it is one of my largest current positions. And that brings me on to RCL, Royal Caribbean Cruise Lines, okay? Obviously it's in the same situation as CCL, being hit massively hard. The recovery in this one is actually still quite high as well. We're about 35%, roughly the same as CCL in terms of the recovery. So the only way we can compare these is by their finances. And the profit margin is considerably worse at minus 262%. The debt is considerably higher as well. And the EPS is also negative $19. So for me, it's a no-brainer. They're both bode in the same potential returns in terms of the stock price. However, CCL has the much better finances. So RCL for me, it's not a complete write-off. It's just one that I would put in the meh category, okay? So it's a bit meh. You know, I think there's much better plays out there. Let's touch on the third one here, the third biggest cruise line, and that is Norwegian Cruise Lines. Now, Norwegian Cruise Line, once again, we have to relook at their finances. They dropped off crazy amounts again, and they actually bode a much higher return of currently around about 42% from that crash level. But their finances are by far the worst out of the three, with a negative 313% profit margin and a debt level of about 76%. The profit margin is ridiculously bad, and for me, if you're going to go for one of these cruise lines, it would have to be Carnival over the top, which is why I rate Carnival higher. Norwegian would be the worst one, my least favourite out of the three. I do not currently hold them. I do not plan on getting a position. So for me, I'll be staying away from Norwegian Cruise Lines. Now, I do want to shift focus back here to some of the airlines, okay? The other two big American airlines, Delta and United Airlines. I've rated American near the bottom for me in terms of debt level, etc. and Southwest high up in terms of their finances as well. Middle ground plays for me, though, are Delta and United. I do currently own Delta, only a small position in my YouTube portfolio. I do not hold any United. I would probably put them at about equally the same. They both sit around average for me, okay? They're not the most exciting ones out there for sure. They do boast a nice return, but yeah, the finances aren't that great in my opinion. But they're also not the worst play. So I'm going to put them as middle grounds on both of them, Delta and United. But let's get our first quality company up here. And this is one that is currently making a profit in the travel sector that still has potential recovery to go in terms of how they was hit during the pandemic. Their stock is still down about 32%. However, they are actually making a profit of about 3% profit margin. PE ratio is currently 21. A little high, but it's very unusual to get a travel stock in this current day and age making a profit at this moment in time. They have a debt which is fairly high as well, but this is one that has big recovery, and we're talking about Jet2, okay? Ticker symbol Jet2. This is a UK company, kind of similar to Easyjet, low cost airline. And yeah, people are going to be trying to save money when they're traveling again, get the cheaper flight options, and Jet2 has been around, and it's got one of the best finances out there in terms of the UK airlines anyway. So Jet2 for me is a quality company, which I do not currently own, but I am definitely considering over the next few days getting a position into Jet2, maybe adding it to my YouTube high risk portfolio as well. It's high risk because it's travel sector. However, this is one of the best finances out there. That's why for me, Jet2 is a quality company. Another UK airline, well, this one's actually based in Ireland. You may have heard of it, kind of similar to Jet2 in terms of its low-cost airlines. We're talking about Ryanair, ticker symbol RYA. This is another company that the finances aren't too bad, okay? They are making a loss, but only ever so slightly. One of the better ones out there. Debt ratio is not too bad either, and same for the EPS ratio. We have to look at the finances, like I say, when we compare these companies. The only thing I would say about this one, why I would not put this on quality, is because the stock price is currently a lot higher than where it was in the crash level last year, okay? We're actually up at the moment about 5%. Now, I know that's not amazing and not a massive amount, but for a company to be trading higher that has been clearly hit hard and it's making less revenue, less profit, is quite, you know, it doesn't seem like the best value option for me. But, of course, their finances are good and it will continue to rise, in my opinion, once traveling starts picking up. So Ryanair, for me, is a good company. Now, for my last kind of like full all-round airline company here is actually Wizz Airlines, ticker symbol WIZZ. I've covered this one a few times on my channel before. This company is, once again, a very few of the profitable ones, okay? And it's another low-cost airline company, predominantly flying all throughout Europe. They have been smashing it throughout the pandemic. Clearly still picking up money because their revenue has been doing very well still, and they are profitable. They're actually a 10% profit margin at this moment in time. One of the best finances out there. And you got to say, if they're performing like this in the current situation, imagine what will happen once things do start to pick up. I would like their price to come down a little bit more from where it currently is, because it is currently higher than the pre-crash. However, I think in this situation, considering the finances are very good, this is one of the best airlines to buy. I actually made a video on this saying the best airline stock to buy, and this was back in about July last year. Since then, it has done amazing in price. Wizz Airline for me is an amazing company, and I've recently added it to my portfolio. Now we're going to move on to a completely different sector here. And this is actually one that's kind of a bit of all-rounder. Like an ETF for travel, we are talking about TUI, ticker symbol TUI. This company has cruises, airlines, hotels, retail shops, online booking agencies. This company has a bit of everything. It's like an ETF for a stock. Now this company, you know, it still has a bit of a way to go. It's down about 30% from its stock if we're going to get back to those levels. The debt is quite high, okay? The finances are by no means the best on this company. They will be actually near the lower end of these companies. However, with this one, this is, like I say, this is like an ETF. It's like an all-round for the travel sector. You're getting a bit of exposure into everything, and that's what I like with a company. That's why this is actually one of my favorite companies to hold. Would I buy at these current prices? I'm up quite a lot on TUI, so maybe would consider adding a little bit, but by not too much. However, I would put this as a good buy. Not amazing because the debt level is quite high and the finances are not good. However, I don't want to put this on average either because I think this gives you good exposure into the overall travel market. So TUI for me is a good buy. Now up next we have a couple hotels I want to list here, and we're going to compare these two together because they're going to equal the same rating for me. Hilton and Marriott. Hilton Hotels and Marriott International. These are two hotel chains which are currently absolutely storming it in terms of their stock. The stock is trading way higher than it was pre-crash, which for me is insane considering their revenue is down, okay? They are considerably overvalued companies. And for me, I do like the hotels, and there are a few that I'm looking at interested potentially getting in. However, for these two, I think they are considerably overvalued. If you're trying to get some stocks in this sector, you want to be looking at some more value buyers. So for me, I'm going to put Hilton and Marriott a stay away from. I think they'll do well because there's a recovery due, of course. However, if you're trying to get a stock with a much better valuation, for me, it's not going to be these two. So Hilton and Marriott, I'll stay away. Moving on to a completely different sector here, we have the online booking agencies. You have to consider this is not all about the hotels, the cruises, airlines. People need to book these holidays somewhere. How are they going to book it? Well, they have to go and find an online agency or go to a retail store. On the Beach is a company in this sector. On the Beach is a UK company, ticker symbol OTB. Now, this is one which I did used to own. I sold out and took some profits for these. I do think they have good recovery. Their debt level is not too bad, about 41%. A bit higher than what I would want for an online company. However, their profit margin is also not the best or the worst, okay? Kind of middle ground, currently making a loss of about 54%, which comparing it with other stocks in this sector, that is not too bad. For me, On the Beach is an average company right now. I don't think it's going to be the best one in terms of, you know, the safest play / best rewards, but I also don't think it'll be the worst position in your portfolio. So On the Beach sits firmly in average position. And there are two more travel agencies I wanted to touch on. We have Expedia and Trivago. Trivago is a UK online agency. Expedia is a US base one. Expedia has been storming it. It's done absolutely insane over the past year, which I think is quite strange, to be honest. I think it is crazy prices right now for Expedia. The debt level is about 86%, which is very high, particularly for an online company as well, and it is of course making a loss. We compare that with Trivago. Trivago's debt is considerably better than Expedia's, but it is still it's about 20%, and the profit is making a loss of about 98%. They're both not looking great financially, so I'm putting them both as meh. They do not excite me as investments. I think On the Beach is slightly better positioned in that industry, so I'm putting Expedia purely for the valuation as meh, and Trivago, I think it could be performing a lot better financially. That's why they both sit as meh. Now we're into our final three for this video. This one is completely different to all the rest. We're talking about Wynn Resorts. You may have heard of this company. They're like a casino chain. They're hotels, casinos, everything. Of course, this is a tourist-based company. When travel picks up, this one will do very well. I wanted to include this in here because it is in a different sector to all the rest of these. It's not one I personally hold. I do think it has very, very high amounts of debt. But of course, with the traveling industry picking up and the tourism industry picking up, going to casinos, etc., it could be a very interesting play. It's been a bit up and down, their stock, over the years, so it's very much middle ground for me. I was tempted to put this a bit higher, but I've put this one as average as well because it's not one that massively interests me. Would I get in if the price was right? Potentially, but right now at its current prices, it is an average buy. We're getting on to our last two here. This one is actually one of my favourite companies of all time. I'm not going to talk too much. We're talking about Disney, ticker symbol DIS. It has cruises, airlines, movie theatres. You know, it's a bit of everything. It's theme parks. Think about the theme parks. A lot of people just travel to Paris and Florida just to go to their theme parks alone, which results for a massive amount of their earnings, which have currently been closed for the majority of the year or at a restricted capacity. When all of this picks up, this company is going to thrive, and with or without that, it has the online streaming service from Disney Plus. So Disney really is a strong buy in my opinion. I would like the prices to be a bit further down from where it has, because it has run up a lot, but I can never see this one really doing bad. It's always going to be a stable company in my opinion. That's why Disney is an amazing buy, an amazing company in my opinion. And our last one up is actually a request from somebody on the Patreon where I looked into this company. I do quite like them. We're talking about First Group, ticker symbol FGP. This is like a RAL, a travel company, okay, but not in the airlines or something. This is more to do with train lines, okay? And this is another good one to think about. People aren't getting trains as much. They're working from home, etc. right now. It definitely has a lot of potential. Looking at their finances, they're only making a small loss, which compared to a lot of the other companies right now, it's not too bad at all. Their debt levels are quite high though, 85, and their EPS though is also not too bad, 0.005. It has a bit of recovery in terms of where it was pre-crash, of currently about minus 29%. But with this in mind, it's the only company that I've looked at really in this sector, which is like buses, train lines, etc. So I think once again, it's good to have that extra bit of exposure. So I'm going to put this as a good buy. I do not own these at the moment, but one that I have been looking at lately ever since somebody mentioned it to me. Yeah, potentially adding to my portfolio. So that's the list today, 21 different travel stocks there. Like I say, this is just my personal opinion on where I personally put these. I think all of these have good recovery potential. You know, I don't think these have risk of going bankrupt in the next few months. I think they're all going to do well in the short term. It's just a matter of how long you plan on holding these, because the debt will need to be paid back on many of these companies. So you want to try and pick ones with good financials, hence my rating for this, / good exposure as well. So I hope you have found this useful. Like I say, it's just my opinion. If you want to come and join us on the Patreon, link to that is in the description. Please go ahead and smash the like and subscribe to my channel as well. I may well do like an EV tier list or something else, you know, value stock dividend tier list. I don't know. Let me know your thoughts on that in the comments below. Thanks for watching, and until next time.